Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, June the 8th. Well, U.S. stock indexes are slightly lower so far today as shares of Apple and its suppliers fell following a report that the iPhone maker was planning to produce fewer phones this year. Apple was down 1.6% after a report said the company has asked its supply chain to manufacture about 20% fewer components for iPhones in the latter half of 2018. Investors are also cautious ahead of a contentious G7 summit meeting in Canada, with U.S. President Donald Trump admonishing Canada and the European Union on trade today, raising the specter of a trade war. And on that note, we will go ahead and look at three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 spider, symbol SPY. Now we know that the SPY had an all-time closing high on January 26 at $286.58, which is about 28.65 on the S&P 500 itself. Since then, we've had a very volatile ride with the SPY falling down to its 200-day, moving back up pretty dramatically, actually 2 times, falling back down to the 200-day, then unable to rise much farther, hitting resistance, up, down. But as you can see, since March, the ETF that follows the S&P 500 index has managed to start moving in an uptrend. Now, when I captured this chart today, the SPY, this little tiny spinning top candle you can see right here represents today. We've had pretty low volume so far. The SPY, when I captured this, was trading at $276.91, or about $27.69 on the S&P 500 itself. Now, last week, or a little over last week ago, we had a consolidation zone in here, but the SPY has managed to remain in this little short-term uptrend. We've got it in here, and is bumping up against this top channel line. It did yesterday and maybe even will again, which comes in at about 278, 279 right now. So we have the lower channel line rising up under the 200-day moving average, as you can see right down a little bit lower on this chart. The 50-day moving average is coming in at 268.44 right now. The 20-day is coming in at 273.22. I'm anxious to see if the SPY can break out this week. Please remember that we have on Wednesday the FOMC rate decision from the Fed, and I'm curious to see how this Wednesday's rate decision, especially if the Fed raises interest rates another 25 basis points, I'm wondering if the SPY can maintain its upward momentum, or if it needs to return to support, maybe down around 274, or even down toward 268, where the 50-day moving average is coming in, and we also have price support along that line. So waiting to see here if the SPY can push up higher and move over that upper channel line. That would be fantastic. Head back up to 280 or so, these prior highs. Or if a rate decision does come into play, will the SPY give up a little bit of its gains? So let's see which way the SPY moves on this coming Wednesday afternoon, about 2 p.m. Eastern Time. The FOMC announcement should be issued. Okay, our next chart today is a real happy camper. Today, as you know, we in Toni's Market Club, we're very fond of watching the IWM, and we've spoke of this before in this space. That is the iShares Russell 2000 Exchange Traded Fund. This fund obviously represents the Russell 2000 Small Cap Index. These are companies valued at $300 million to about $2 billion. And we know that the IWM can act as a leading indicator for our market. Now today when I captured this chart, the IWM was trading at 165.98. You can see what a very different pattern this has than the SPY. SPY looks like more like this kind of pattern, but certainly hasn't had this incredible breakout of an uptrend. Now, the IWM made a new all-time closing high this past Wednesday at 166.93. So it's definitely broken above these March highs and the old all-time high back here in January around 160. And since recently it fell down back down to its 200-day moving average, the IWM is definitely a drama queen. She likes to fly high and drop low and make all kinds of dramatic moves. And so since this April drop here, she started up, I'm going to call her a she, started up in this uptrend, made a higher low in April here, and then right in the beginning of May took off like a moonshot. And as I said before, is now up here at 165.98, again on this very small spinning top day on small volume, which we kind of have to watch. Now, what I want to bring to your attention here, if we look at the 14-day RSI, Relative Strength Index, this top line where you see the RSI right here, where you see the RSI on its scale, this top line that it's above right now is the 70 mark. So when price when the RSI, or when price causes, I should say, the RSI to move up over the 70 mark, that means that this current price pattern is overbought. It's we could call it too good to be true kind of a thing. So we'll have to see, because small caps are influenced by rates, interest rates, we'll have to see if the IWM will tolerate the Fed raising interest rates, if in fact that takes place this coming Wednesday. Now, it's positive for the market that the IWM has flown up like this. Of course, the IWM is filled mainly with U.S.-centric stocks, companies that do their business only in the United States and not overseas. So you can see that this is a very positive outlook right here for the U.S. markets. But I want to see, and I'm hoping that remains the same, right on through Wednesday afternoon, again, when we receive the Fed announcement. So I might be holding back a little here. I wouldn't probably be buying the IWM until Wednesday afternoon to see what kind of response the IWM has if, in fact, we have a Fed interest rate raise. So keep an eye on the IWM. Again, as long as it keeps moving higher, that is positive for the broader markets. Now let's look at an ETF we haven't looked at in quite a long time. This is a daily chart of the Invesco Water Resources ETF, symbol PHO. It has 35 holdings. Some of the top holdings in it are Ecolab, Danaher, Roper Industries, and American Water Works. Obviously, Invesco Water Resources has components that deal in the water industry. And a lot of those components you'll find are in the industrial sector. A lot of them are in the healthcare sector. It's kind of a wide berth of stocks in the Water Resources ETF. Now, it made an all-time high in January at 3182. Then, like most of the other indexes and stocks in the market, it fell pretty hard in January down to its 200-day moving average, and in February it made an intraday low at 2820. Since then, it's popped higher and lower. It's moved up and down, up and down, up and down, above and below its 50 and 20-day moving averages. But what it's done here that's quite nice is it's managed to keep an uptrend going with at least slightly higher lows here. Now, we've also had slightly lower highs in some cases, so it's forming a triangle, but it's kind of an upward pointing triangle here. When I captured the chart today, the PHO was trading above its 20 and 50-day moving averages at $31.11. Now, what I would like to see, of course, I'd like to see the PHO break out of this upper trend line and move up into, say, the $31.20 range, breaking above this trend line, the top channel line on the triangle. So if the PHO, and I always like to get water stocks going into summer, if the PHO remains strong and after the Fed announcement, and I don't know that it would affect it too much, but it could. If the PHO can remain strong after that and break out over this top channel line, say around $31.20, I may add shares of this to my portfolio. Now, as long as it, and I'm looking for it to potentially move higher over 31.40, that would be prior resistance, prior price resistance, and looking for it to move up higher. Now, I call these summer trades or summer ETFs because this is not a high risk. This is not a high risk trade. Despite the moves you see on this chart, it really is a fairly sanguine ETF, and it's grown more so over the last month. So this is the kind of trade or investment where you can put a stop, a trailing stop. Of course, in my case, at least initially, I'll put it under the 50-day moving average, and it would be a little less time-consuming. You certainly don't have to look at the PHO all the time. You just need to put your stops in. It's not as time-consuming as a high-momentum stock or ETF that you could get into. So I like to call them summer trades, a little less onerous sometimes. So the PHO, keep an eye on it. I may add shares if it continues higher. My initial protective stop would be a close beneath the 50-day moving average, which now comes in at $30.55. Okay, on that note, let's look at the coming week's economic reports. But first, please join us this coming Monday, June 11th, for our next session of Tony's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades, and we have had some really incredible winners lately. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. And we actually have a really good time as well. So please join us. If you can't attend our live session, no problem. The recording of our session is available to all of our members just a few minutes after the session ends. For more information and to join, go to tonysmarketclub.com. And now for the coming week's economic reports. On Tuesday, we have the CPI, Consumer Price Index. On Wednesday, we have the PPI, or Producer Price Index, our usual crude inventories, and the all-important FOMC rate decision on Wednesday afternoon about 2 p.m. Eastern. On Thursday, we have our usual jobless claims, we have retail sales, and we have nat gas inventories. And on Friday, we have Empire Manufacturing Report. Again, join us for Tony's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.